Public Provident Fund, Employee Provident Fund, Post Office monthly income schemes, fixed deposit. These are some of the schemes that we use to save our money in as investment options to get some sort of returns. Hi, my name is Brinda and welcome to IndianMoney.com. Today, I will tell you why you should invest in mutual funds. To start off with, I already told you some of the schemes that people usually resort to save their money. But what is happening in the later trends is that the interest rate given to these schemes is slowly depreciating. Now, if I'm investing my money somewhere, I would want it to appreciate, right? I do not want my money to be stagnant. I want the curve to be an upward curve, my graph of savings. So when I'm speaking about this, I would want to resort to the best possible investment scheme. Let me tell you, in the years 2020 and 21 alone, 81 lakh people have invested in mutual funds. This is obviously trying to tell us something. What is one of the main reasons why you should invest in mutual funds is that it caters to your personal need. It is like a buffet system. So what do we do when we go to a buffet? We pick whatever food items we want and we make our own meal. Similarly, mutual funds is catered to your specific needs of savings. Let me tell you how. Suppose the time period you have is just 1 week. You're investing some amount and you want it back in 1 week. Then you can go for the liquid fund. Next, suppose you have a little longer period, say 3 to 6 months time, and you want your money back in 3 to 6 months time, you can go for the ultra short term debt fund. Now, suppose you have say 3 to 5 years time, you have a little longer time where you can wait for your money to grow. You can go for the conservative balanced fund. Now, one more option that you do have is you're looking for a retirement scheme or you have a long time period. You can opt for the equity fund where you can claim your gains after a long period, or even it can be a backup retirement plan for you. Now, when I'm saying this will fall into one of your requirements at least. At least one of these options will be ticked off in your requirement. Another major advantage is that there are no hidden fees in mutual funds. Whatever they will take from you as commission will be told to you upfront. Now, in other schemes, for instance, say like money back policy or endowment policies, they have up to 30 to 40% commission. Now, what does this mean, right? If you are getting or investing, say 1 lakh rupees, you will end up paying 30 to 40,000 rupees as just commission. Now, can you imagine? I know how painful it will feel, right? In mutual funds, on the other hand, right, there is zero commission, which means you have to pay only about 0.5 to 1.5%. Expense ratio is what we call it in mutual funds. Now you look at it, where is 0.5 to 1.5% and where is 30 to 40%? Such a stark difference, right? We will usually resort to looking at investment options where we won't have to pay a lot of tax, where we won't have to pay a lot of commission, because this is our hard-earned money, right? We want all of it to be redeemed back to us. We do not want to end up paying it to a third party. So I would suggest that this is the best option if you do not want to lose out on a lot of money for say tax or agents or commission and such options. Coming to FD now. Now suppose you have a maturity period of say 3 years, right? Your maturity period is 3 years. But due to some unforeseen circumstances, you want to withdraw this money before 3 years. You will have to pay a fee because you're withdrawing it before the maturity period. You will also not get the money you were promised after the maturity period. So you're losing out on money there as well. So all this is not there in mutual funds. This is absent because you can withdraw your money. You can redeem your gains whenever you want. Another thing, let me tell you, there is this thing called long-term capital gains in mutual fund, which means for a particular amount, no, if you leave it for over a year, then the amount that you're redeeming, no, is tax-free. This is a novel feature that we have in mutual funds. Now, one of the most sought after investment options is real estate. As you know, people believe that investing in real estate is the best option. Now, if you want to buy a property or a site, what will happen? First of all, there will be stamping charges. There will be charges that you have to give as commission to the agent, right? And say you do buy the property after all this and you intend to sell it when the market goes up, or you feel like you have the need for money. You will have to first look for the proper buyer. Then you will have to shell out on commission for the agent or third parties or brokers. So this is a long process, right? So you are losing out on a lot of money in between here. Now say you do want to buy, but the money is a lump sum here, right? A good property in Bangalore will cost you about say 45 to 60 lakh rupees, a decent flat. If you want to buy a site, an Ekata site, it will cost you anywhere around 70 to 80 lakh rupees at least. Now, suppose you do buy a property and you want to sell it, and you sell it to a good buyer for a good rate. The money that you get in this, you will have to shell out huge amount of this on tax, right? This amount that you're getting after you sell your property is not tax free. Now imagine you're getting such a huge amount, and for that you have to pay a bigger amount of tax, right? Not want that, and it will obviously hurt us. So the best option for you, if you want to get returns without having to shell out money for other sources, like I already told you, is mutual funds. Now what's the catch? You will tell me, no, I'm saying so much about mutual funds, it's such a perfect opportunity. What is the catch? There is certain amount of risk involved. Now with everything good, there will be some catch. The risk is close to minimal, and it is also market linked. Now, unlike stocks, for instance, so when you're buying stocks, what happens is you're buying shares of one particular company. Now, what happens if that particular company falls in the market, then the entire amount you've invested in, that will fall as well. But unlike that, mutual funds, on the other hand, no, you're investing in multiple sectors, you're investing in multiple companies. So tomorrow, if the automobile sector falls down, the finance sector will still be there to back it up. That way, there is a balance created, as a result of which your complete loss or the total loss that is there will not be as much. So the risk, when I say is close to minimal, I mean that it won't be a huge impact on you. And obviously, before you invest in mutual funds, you will have to do some sort of background check, right? And you will be investing in the right option, studying the market. So that way you will ensure that the risk is not that much. And especially if you're going for, say, equity or a long term, the risk is close to nil. So that way you're in safe hands only. So what are you waiting for? I think you should go out and invest in mutual fund today. For more such financial content or content related to business, agriculture, career building, download our Financial Freedom app from Play Store or App Store. Like this video and subscribe to our channel. Click on the bell icon so you will be notified every time we release more such interesting content. Thank you for watching IndianMoney.com. Get wise, break free.